Hey everybody, Boris last week at Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar from March 12 to March 16, 2018. Has dollar found the bottom? That is really the critical question facing us going forward, because it appears this week that a lot of things, both sentiment-wise and technical-wise, and maybe even fundamentally-wise, have kind of evened out for the dollar, and this vicious one-way selling that we've seen in the dollar for the last couple of months has maybe finally reached its nadir. And at this point, we may be finally starting to see a move the other way. The critical thing I think that happened, there's several things that happened that point to a possibly higher move in the dollar. One, the Fed remains unabashedly hawkish. The new chairman, Chairman Powell, is very much on task to want to complete the 3, perhaps even 4 rate hike cycle as he tries to move towards a more normalized monetary policy. Nothing in the economy right now is slowing him down, even though there is very little inflation and very little wage growth, which has really been the one nagging issue on the U.S. side. And it still remains to be, to me, the one nagging issue that could sabotage the dollar. But in the grander scheme of things, the greater preponderance of positive data forces the Fed to continue to be more hawkish. So ultimately, you're going to get higher interest rates, interest rate differentials ultimately have to favor the dollar, if for nothing else than simply the cost of holding anti-dollar positions is going to get a lot more expensive as we go forward into the year. Secondly, the North Korean news has really calmed down a lot of the chaos and has kind of changed sentiment away from just absolute pandemonium with tariffs and investigations and everything else to perhaps some hope and better sentiment amongst investors. So that certainly is a positive. Third, U.S. economy continues to perform relatively well. This week, we don't have a lot of data in front of us, but we do have actually a very, very important data set, which is the U.S. consumer. We'll see if this week, finally, the U.S. consumer begins to feel the benefit of the new tax cut that we've enacted. And that could be the tipping point of where the dollar flips up finally for real. So we'll see if that's going to be the catalyst, because that's really the only major event on the calendar that we're going to be watching. Now, as far as levels go, we certainly saw the euro come down a little bit. Mario Draghi did a good job of trying to talk it down. The message out of the ECB, and this is the key thing to me to watch, is that no matter what you're thinking, we're not going to normalize policy for quite a long time. We may terminate taper in September, which is what we said, but there's no way we're going to turn back now into a more tightening policy. We're going to remain negative yield for quite a long time. That by itself really puts some downward pressure on the euro, because if the dollar continues to become more and more positive yield, and the euro remains negative yield for quite a long time, the spread, for example, between the 10-year and the German Bund hit a 2.5-year high this today, actually, on Friday. So watch that spread. To me, it's really all going to be going forward all about U.S. yields. If we start moving our way back towards the 3% on the 10-year, it really provides a massive boost to the dollar. So going to be watching that pretty carefully. Dollar yen. The most important thing I'll show you on the charts, of course, is the fact that we've held the 105 support, and that is the one technical thing that gives me some solace that we may be finally making a turn here. And cable, honestly, just marking time. There is no stories on cable this week that are of interest. We do have the UK budget, which is going to be interesting, but not necessarily impactful on the currency. The market seems to be relatively convinced that the BOE is going to hike in May. I'm not sure. The UK economy data has been neither bad nor good. It's just kind of been waffly. And the Brexit issue still remains unresolved, although it seems to be moving forward. But the Ireland issue, the open border with Ireland, is the one thing that could really scuttle a deal. So UK to me, cable to me is just sort of the least clear fundamental case, and in some ways the most muddy technical case as well. Now, looking at the calendar going forward, very little data. Yes, we have CPI. This generally we're actually bearish. We think that this is not gas prices eased, and we don't think that the CPI is going to be a dollar positive event going into the week. The retail sales actually really are an important data set. They've been a disappointment for the last 2 or 3 period cycles, and wages have really not grown. So it's really going to be important to see the retail sales at least rebound to expectation, which is 30 basis points from zero last month. If there's an upward surprise, if the paychecks have gotten bigger and the tax cut is really starting to make its way through and consumer confidence is starting to pick up, that would be a massive dollar boost. But it's a stretch. To me, that would be unambiguously positive dollar sign for the week. But we'll have to wait and see exactly how it develops. Other than that, there's nothing really on the calendar of any import as we go forward. Housing data, industrial production, U of Mich, which is final. No, this is actually preliminary. I take it back. University of Michigan preliminary data. That really isn't expected to vary much. Consumer sentiment has essentially been stuck at relatively high levels for the time being. And there isn't really much of a change because the economy really hasn't had much of a change as we go forward. Everything seems to be working hunky-dory, but nothing is really accelerating as everybody is expected to, which is why you see this kind of a bipolar reaction in the currency cycle. Now, the one thing that I think that has been clear, that did give a very nice clean signal, is the short euro trade. Euro has now created a triple top, a failed triple top, actually a lower triple top at the 25 level. The Draghi speech definitely drove us down. So really, all things being equal, it seems reasonable on any kind of dollar strength that the euro should try to make its way towards the 22 support. And that's where it gets interesting because, of course, that's going to be a double bottom test. If we can test the double bottom, that would be, and actually break it, that would be a much worse, much more negative technical construct than we currently have. As of now, it's hard to say, but to me, the trade is short euro with a stop above the highs here. Now, if the 2460s, 2470s get taken out, then this was a fake out, and the dollar strength is illusory, right? Illusory is the word, right? And therefore, this technical structure actually turns very bullish again because what we have is a series of higher lows and a move back up to challenge the swing highs. But for now, given this signal and the fact that we have a failed lower high, you have to operate on the idea that selling the rallies is the better trade, especially if you get any kind of support from U.S. yields, because the story out of Europe really fundamentally is not positive. So the only rally here is going to be an anti-dollar rally through these levels. And I think it's going to be harder now to make that case as we go forward. So I like selling this. I think there's decent value here all the way down to the 22s, and it's likely where it's going to go as we go forward. Cable, I have no view whatsoever. It's just seems to be stuck in this 37, 38 trade, very, very low volatility. One of the interesting things technically, usually that you always learn from is lower volatility. You wait for the signal. Let's just see how it breaks out. If we get to me, a massive candle that takes out the 37s really suggests that we have a move right back down towards the 34s. If somehow there's some positive news or some massive anti-dollar news and we're now above the 40s somewhere next week, that's a positive signal and you have to honor that. But until we get a signal one way or the other, it's just a no trade for me. It's a pass. Dollar yen is an interesting long. And there's certainly some cause for optimism. The double bottom test here that held. The 3-4 days where we tried to run the 105s and it held. The rally today, which looks pretty good as a breakout rally, the one thing that everybody's been pointing out to is the fact that we stalled at a 20-period SMA, that we haven't cleared a 20-period SMA, and that that this could be the cross upon which this thing falls upon. Maybe. I mean, it certainly would be a lot more bullish if we took out the SMA, if we closed above the SMA, because that would signal that this is truly a bottoming formation, and the 108 is going to be in sight. So wiser heads probably need to sort of wait to see a close around 107.30, 107.40 to make the run. But my argument, I think, is that even if we kind of fail here, the more interesting question is, are we going to completely break down and break the 105s? And I think that probability is very unlikely at this point. So even if we get rejected, the possibility that we hold the bottom is still pretty decent, and therefore the potential here for a longer term breakout is still in play. The other hand is that while everybody, the conventional thinking is that, well, yes, we're getting held down by the SMA. If they come in Monday and just decide to sweep it up, the move will go to 108. Yes, we will close on 108 at that point. And at that point, a lot of the move will be essentially done. So it's worth a punt, I think. But if you really want to be properly technically oriented, you really do need to wait till we kind of clear and close above the SMA in order to make this a viable trade. So that's basically how the majors shape up at this point. Euro looks a sell, dollar yen looks like a medium term buy, and pound is indeterminate as we start the week.